Welcome to a day that will mark a before and after in the history of digital assets. Today is March 4th, 2026, and if Ethereum is on your radar, what is happening right now with Grayscale's ETF, known as ETH, is something that will change your view of cryptocurrencies forever. Traditionally, investing in crypto meant waiting for the price to rise to sell at a higher price. But today that narrative is dead. Today, Ethereum has officially graduated into a fixed-income asset for the masses. Grayscale is executing the payment of dividends derived from staking directly to ETF investors. This is not just another piece of news. It is validation that Wall Street has found a way to turn computer code into a steady cash flow similar to Apple dividends or Treasury bond interest. Before diving deeper into how this income stream is changing the game, I will pause for those looking to move from analysis to action. If you constantly wonder which platforms to trade these market scenarios on, I usually recommend regulated brokers with competitive spreads that are a solid option to execute crypto strategies and other assets. Check the comparative link in the description or the pinned first comment of this video, where I left a detailed comparison so you can choose the one that best fits your needs. Now, returning to the impact of what is happening today with Ether, we must understand the mechanics behind the money. Ethereum staking is, in essence, putting your coins to work to secure the network in exchange for a reward. Until recently, this was a technical process reserved for experts or digital native users. However, with today's payment, any investor with a traditional brokerage account is receiving those yields without touching a single private wallet. But how good is this yield compared to what traditional finance offers? If we look at U.S. Treasury bonds, which are often the safe haven by excellence, we see yields that struggle against inflation. Ethereum, for its part, today offers a staking yield that not only competes in percentage, but has an ace that bonds will never have: fee burning. Every time someone uses the Ethereum network, part of that fee disappears forever, making the asset scarcer while you, as an investor, continue to receive your payments. It's a dual engine of appreciation that is leaving traditional fixed-income analysts perplexed. This phenomenon is what many in the higher echelons of finance are beginning to call the new black gold. Just as oil powered the industrial era, institutional staking is powering the era of decentralized finance backed by large institutions. Wall Street does not want you to ignore this detail, because staking allows capital to be productive 24 hours a day, 7 days a week, without human intermediaries slowing the process. We are seeing a massive migration of capital that used to sleep in bank accounts toward these vehicles that offer total transparency thanks to the blockchain. The importance of Grayscale's payment today is that it removes the barrier of fear. If institutional investors see that the cash flow is real and constant, the demand for the underlying asset only has one likely path. It is vital to understand that the structure of these dividends is designed to retain the long-term investor, reducing the extreme volatility that used to scare institutional capital. In short, what we are witnessing today with the Ethereum ETF is the democratization of a wealth generation tool that was once hidden behind layers of technical complexity. It is not just about price going up or down. It is about how much participation you have in the world's most used network and how much they pay you for it. If this analysis has given you clarity about the paradigm shift we are living through,